My name is Robert Lyon. Today we're going to be going over the 5 rules to profitably trading the NQ futures market. This is not financial advice. This is me helping people learn and figure out what I've figured out so that you can make money trading futures every day in the markets. Now this is just for NQ. You can use this for multiple other indicators, but I pretty much strictly only trade NQ right now, and you'll learn quickly that each symbol trades with its own kind of variety, right? Each one of them has their own kind of flavor of the way that they move, the way that they do things. This is specifically for NQ and specifically for the futures market. So the goal is to teach you how you can make money every week trading NQ futures, trading with prop firms' money for profits. Okay, I use Top Step. There's going to be a link down below this so you can sign up with Top Step. I trade with Top Step, view the markets on TradeView, and I actually input my trades in Ninja Trader, okay? If you haven't seen any of my other videos, that's what I use. So this is rule number 1. Get in, get green, get out. I'm going to say it again. Get in, get green, get out. All right, the biggest thing that's going to hurt you trading this markets is when you basically make money and then you start over trading, okay? We really have to talk about this for just 1 second. What happens in our minds is when we start trading and we win, we get very revved up. We're like, oh, heck yeah, I just made money, right? And our brain keeps on talking and we start to get that little hint of the gambler's addiction, right? The little devil on our shoulder that's like, oh, just one more trade, just one more. But when we get into that revved up state, what's going to happen is you're going to take a good day, a green day, and you're just going to burn yourself into the ground and you're going to burn that account. So the main rule is what? Get in, get green, get out. The other thing that I want you to know, the reason that I trade, okay, this typically goes against all of my wealth coaching, is because I don't own anything, right? I don't own these futures trading. I don't have any, they're not really like a hard asset. But the reason I do this is because I can make a shitload of money in a very short amount of time, and then I can get on with my life. That's what I want you to be able to do. So again, if we are going to collapse time and make as much money as possible in a very short period of time, the number 1 rule for trading NQ futures, get in, get green, get out. I hope you understand that, and I hope you understand how important that is. Rule number 2, always have a stop loss, especially with NQ. It's very sporadic, I'll say, okay? Now, once you trade it for a while, you'll start to get in rhythm with it, but there's going to be events that happen. There's going to be news days where NQ can just jump 10 points in any direction, and you need to have a stop loss. I don't care if you think you're a badass at trading. Always have a stop loss, even if it's very far away, but you have it so you can move it up, okay? So always have a stop loss. Number 3, always have a profit goal. So this goes back to what I was saying about get in, get green, get out. Have a profit goal. Now, once you hit that goal, you close the computer and you just get away from the damn thing and you go do something else for the rest of the day. My goal every day is $1,500, $30,000 a month. And if you take what I teach you in this little session here, or if you want to come work with me and I'll teach you how to do this, is a game changer. But have a profit goal. Now, I will be completely transparent. Some days I just make like $600 and I just walk away from the damn computer because I don't want to get revved up, or I'm like up and I don't want to fuck it up, okay? But the goal is $1,500 a day. And if you're trading with Top Step, you're going to see why the goal is $1,500 a day, because they're in the business of making money. And if you make more than $1,500 a day when you're doing one of the $50,000 accounts, you have to do more days of trading, okay? So if you hit your goal, though, of $1,500 and you take a step away, number 1, you're going to learn consistency. Number 2, you're going to hit your profit goal and you're going to step away from the computer so you don't screw up the day. And number 3, you're going to end up making $30,000 a month if you can actually do this consistently, all right? That's 20 days out of the month. Now, you're not going to win every single day. I'm just being completely transparent with you. Not every day is going to be a winner, okay? But your goal is to win more than you lose and to always try and hit at least $1,500 a day and then leave, all right? That's the goal. But again, the better goal is still get in, get green, get out, but you need a target. You need a obnoxiously good number to hit, and once you hit that number, you feel good for the day, you move on. Rule number 4, if you lose, 3 trades you shut down for the day. I don't care if you win the first 2. If you just keep trading and then you lose 3, you're screwed and you're done for. You're shut down for the day. Otherwise, you might just keep losing. 3 trades that you lose, you shut it down, you move on. All right, you're done for the day. You do never want to turn a winning day into a loser. All right, and rule number 5, scale out of your winners. All right, but let them run. Okay, so typically what I do is I get in with 3 to 5 contracts. At the 4 points mark, I take 2 contracts off, or if I'm trading only 3 contracts, I take 1 contract off. Okay, and I move my stop loss to +4. So I take profit, right? Because the best way to trade is to be in a trade where you've already made money and you can't lose any money. Okay, let your winners ride. Okay, so whenever you take profit at the +4, you move your stop loss to the +4, and you let the rest ride. All right, if it's just cruising, you do the same thing at +10 points. At +10, you take profits, the rest just ride. And it could ride all day, and you could be printing money, right? But at least you'll have your stop loss, okay? So at +4 points, you're going to take a few contracts off the table, take some profit, and you're going to move your stop loss to +4. At +10, you're going to take some profit, and you're going to move your stop loss to +10, and you're going to let the rest ride, and you're going to just let it go and see what happens. And you're going to be already in the money, already enjoying your life, and you're going to just keep letting that one ride and see how high it goes. I have 3 strategies for NQ that work. I'll be honest with you, the scalping strategy is the worst. It's not for beginners, but it does work if you work it and you're serious. Number 1 is going to be breakouts and reverse breakouts. I typically enter my breakouts with 3 contracts and a 20-point stop loss. As soon as it breaks out, I immediately move my stop loss to 1 point below the breakout, and then I double at +4. Okay, so at +4, I double down. Okay, let me show you an example of this on TradingView and what I mean by breakouts. And usually breakouts are a range, okay? They're not like a dead-on line. It's a range though. Okay, so really it starts like right here. We see that we basically, this is the opening, right? So in the open, we absolutely tanked. The price got super low, and it was low enough that all the buyers came in, and then we bought it, and we rode it all the way up to 58. Okay, from 58, we kind of sold off, came down, chop, 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 chop. We came up here, and then this is where I'm going to start looking for my breakout. Typically, after the 15-minute mark, we now have a full range from all the way down here to all the way up here. And I'm going to be looking for my breakout here, okay? So basically came down, tried to break out. Boom, that's the breakout, okay? And when we see this breakout, we know it because, look, we've been stuck at about this level for, 1, 2, 3, 4, 5, 6, 7, 8, 9, 10, 11, 12 minutes, okay? And what I'll do is when I see all these little lines lining up, right, and then just keeps hitting, I won't get in this trade, but I will set my my buy 3 contracts above where everything is stopping, okay? So that way I don't get just and blindly enter the trade. No, I'm waiting and I'm setting when I'm going to buy into the market, okay? I set it. I would probably set it like right about where my mouse is right now, at 18,585. Because it's a good round number. But as soon as that breaks, I'm automatically going to get entered into the trade. And you can see that it goes 20 points basically up, right? If I entered right here, boom, 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 boom. All right, and that's a breakout trade. And then I probably would have gotten out somewhere around here. And this is how you take profits, okay? So you see how the top of the wick, okay? The wick means it went there and then it lost its power. It went there and lost its power. So I know that right here, boom. I mean, really, it probably would have been like right there is where I probably would have set this is the new line, and I would have set my buy-in right at the bottom of this candle. Or I would have entered in for right here, because when you see that no wick, that means that is a strong candle to the upside, and that is a good sign that you want to get into this trade. Okay, so I would see, okay, boom. Here's how high we went. Here we tried to hit it, didn't hit it, went back down, tried to hit it, didn't, went back down, tried to hit it, went back down, went back down. Finally, we break out. That's why it's called the breakout. Boom, we fucking jumped 25 points, and I would have let this thing ride. I probably would have got in here. Maybe I would have doubled down at the +4, which would be the bottom of this candlestick, and then I would have rode that all the way up for another, about $1,000 probably or more, with 3 contracts. Okay, but that is what a breakout trade is. Now there's also, you're going to hate me for this, but there's also reverse breakouts, okay? So again, I hope you see the magic of these though, because there's three things you have to think about: the setup, timing, and the size that you enter into these trades, okay? Sometimes I don't double down. Sometimes I just let those three contracts ride and I see where they go, okay? But there's also reverse breakouts. Now this is going to piss you off, but it's the truth and it's how the markets work. Sometimes we see the chop, right, where we have the ceiling and then it breaks through the ceiling and it goes up, but also sometimes it does a false breakout, okay? And what happens typically with a false breakout is it sets the ceiling, pops up a little bit above it, and then doesn't have the steam to go all the way through and then crashes all the way down to the bottom. Now there's two ways to hit a breakout. Let's see. Let me show you what the opposite of this breakout is. Okay, you know how we had this line for this breakout? Now let's see what a breakout to the downside looks like. Okay, so boom, boom, boom. We're chopping. There's one breakout, right? So to the downside, though. So you see we hit this all-time high, and then we came all the way down here. This is now the new floor, okay? So this is the new floor going to the downside. And the markets always go up and down, right? So then we basically hit this floor, bounced up, came down, hit it here, bounced off it, went all the way up to here, came back down, and then we broke through it here. Right? And then we had a little bounce, and then we broke through it again. Okay? So again, I would have set my enter to short, a couple points down here. So I would have done it like probably 90 really, or 91, right? So at 91, I would have set it, and I would have forget it, and I would have let it hit my enter. I would have got in on the short. I probably would have rode it all the way down to this floor, and I would have gotten out. Okay? So that's a breakout to the downwards side. See how it was basically chopping here? Chop. Clear move to the down. Could have gotten all the way out down here. Might all kept going. And actually it does, right? So watch this. So then now we're chopping again. We're going up. We're chopping up. Here's another opportunity to short. You see how it broke out again? Broke out below our candlestick just a little bit, and then it kind of went back up, but then it goes all the way down and it flushes all the way out. Watch this. Boom, 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 boom. Big ass move. Okay, so we knew that we bounced off of this one, right? So we came all the way back up. We tried to go higher, got rejected, came back down, hit this little line, broke out. Boom. Massive move to the downside. Would have been able to make a bunch of money. That's what a breakout trade looks like. So look at this. This is a big breakout. Right, so you're going to be able to come in here, you're going to be able to draw this line, right? And you're going to probably want to enter down below it. Okay, so you don't want to enter while it's doing the chop. You basically just want to set your enter point a couple points down below. So this you would want to get in here at this 530 mark right here. Basically we knew there was a floor here, right? This is the supply zone where we think we're going to hit here, and the last couple times it's bounced, right? It might have even been over here, so we might even have even more, look at that, even more emphasis on how hardcore this floor is, right? And the harder the floor, the more the breakout is going to be even more strong, right? So then here we hit it, boom, bounced up, boom, bounced up, boom, bounced up. Now we're kind of flirting coming down to the downside. And you can say, oh, look, this is going to be a breakout, right? So boom, we have this little tiny breakout, nice little cup right here action. And then bam, we fucking fall all the way through the floor. I mean, let's see how far this thing goes. That's it. Okay. Yep. Now we broke through another floor. So we had another breakout moment. You see that? See how these breakouts kind of tend to show themselves? And you can start to become a breakout trader with this method. Bada bing, bada boom. Another breakout. This is an example of a reverse breakout though. Okay. So I mean, this was a real flush, right? This is the biggest move. Boom, huge breakout to the downside. Chop. Breaks down a little bit lower. Now, we could have probably gotten faked out by this green candlestick and thought we were going lower, but that was the reversal. That was a reverse breakout. Very tiny one, but still very interesting. Here's another one. Boom, breaks out. Barely goes all the way down, and then here's where the buyers are kicking back in. Okay, buyers step back in. Boom, buyers come back in. We get back to about here. We hit this floor, right? Because once the floor gets broken, it now kind of becomes the ceiling. Boom, we hit another end breakout. But then the buyers are hungry now to get back in. The price has officially gone low enough that the buyers are stepping in and buying now. Okay, plus this was at the open. Oh no, it wasn't. This is at like midnight. So this is just a big move to the downside, and then the buyers say, okay, that's kind of gone cheap enough. This is a deal now. I'm going to start buying in, and then this is where that false breakout is. So what's a false breakout? So this had a big move down, but now we're just going to launch all the way back up, right? So it didn't keep running. This is where we had that pivot point where we changed and we moved all the way back up. So then it's just going to basically fire up, boom, 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 and then it kind of evens out. You see how we're at this floor again, and we didn't break through that floor. Now watch if we break to the upside, what happens. Okay, so I think you guys get it though. For the breakouts, basically you set the roof, right? And then whenever they punch through the roof, a bunch of buyers come in and there's a bunch of orders that need to be filled that drive the price higher there. Okay, so one example of another breakout right here. But now I want to talk about reverse breakouts. Okay, so a reverse breakout. First, I'm going to show you a kind of crappy reverse breakout, and then I'll show you a real good reverse breakout. But the reverse breakout is the same idea where it looks like it's about to break out, and then there's too much resistance, and it flips the other way and goes all the way. Okay, so like right here, we have a breakout. Like really, it's like kind of like down here, and you'll see it. So, boom. It's actually not that bad of a reverse breakout, right? It's like a pretty solid. I mean, you still would have made, but anyway, so like we break down, we go all the way down to here, but then instead of continuing the trend, right, we completely reverse and it goes all the way back up to here, right? So we were kind of like breakout, down, 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 breakout to the downside, tries to push all the way back down to the VWAP. There's too many buyers, too much demand, all the way back up. Okay, so it's like it like broke out, but then it just totally reversed, and that's what a reverse breakout is. Okay, and then here's a better example of what a reverse breakout looks like. Okay, so we have these two. So we have this would be like, this is where we're kind of looking for a breakout right here, and then it finally gets the momentum, right? So it pops up here, rejected, comes down here, tries again, rejected, comes down here. Oh, we finally broke through, right? We think we're going to the moon, but then it just reverses on us. Big red candle to the downside, totally freaking tanks, blam. Okay, so that's a great example of a reverse breakout, and then to another reverse breakout basically. So you see how it goes reverse breakout, but this isn't really a breakout because we didn't have we could have said, okay, over here is this line, right? Where the old breakout is now the floor. But we just like break through this floor, tank it, boom, all the way down to here, and then the buyers step back in. Huge breakout to the top side, right? And then like, I mean, you probably would have gotten in maybe a little bit sooner, but this is another huge candle bar because we finally broke above this without a rejection, right? So there's the breakouts. I'm always looking for breakouts, and I almost always get in with about 3 contracts. As soon as it makes that move, though, I'm immediately moving my stop loss 1 point below. And then if it looks like it's going to keep moving, if it's a big one, what I'll do is I'll get in, I'll write it up. I might get taken out right here, and then it just goes bloop all the way to the freaking moon. But if I get taken out, whatever, no big deal. I'm not going to cry about it. I mean, the real breakout's like right here, right? So if I have my buy-in right here, boom, and then I have as soon as I buy in, my stop loss starts here, and then I just move it to here. I just let this thing roll up here for about, let's see if we get in right here, 23.50 at 4 points, right? I'm going to take some profit, and then I'm going to let the rest ride, maybe all the way up to here, and then I would have gotten out, probably would have gotten out somewhere in this little wick, right? And then just wait for the next setup, okay? But these are big. These are great ways to make some money, okay? So up, down, looking for the breakouts. Boom, another breakout. Here, this was another good reversal kind of, where it just like broke out real quick, and then all the way down the mountain it goes, right? Just crazy if you would have gotten down here. Boom. So here's another floor. I think I made my point. I think you know what breakouts are. I hope you understand what a reverse breakout is. Like here's a reverse breakout again. Where it basically was like, okay, I'm in now for this breakout, goes down a little bit, and then it's like, no, there's too much buyers here. I'm going to completely reverse, and this is where you would say, okay, it looked great, but I'm going to actually get out here, and I'm going to flip it, and I'm going to reverse the breakout. And you're basically going to go all the way up to the moon right there, right? Great reverse breakout here. Typically, though, I'd be looking at this and be like, oh, okay, maybe I can get in. I get in with 3 contracts. I write it down. I move my stop loss like right here. And then as soon as I start to see it come back up, I usually just take a little bit of profit. And then if I break back above where we broke through, this is basically what I'm going to get in at right about here at this wick, or, somewhere down here. And I'm just going to ride this puppy all the way up and see what happens. Okay, so you got to be vigilant. You got to be like water, my friends, to really make money with the NQ. All right, go on to my next strategy. This strategy is terrible. I don't think anybody should do this. Yet I find myself doing it every day, and I make a quick, $600, and then I kind of stop. I don't do this with my main accounts. I only do this with like my top step accounts that I'm just kind of like waiting for the market to give me a shot to get one of those breakouts. Okay, but it still does work. But don't do this unless you are a psychopath like me and you want to lose the money. It's a great way to lose money, but it's very cool that you can make money in choppy markets. That's what this is for. This is for making money when there's chop. So maybe you work 9 to 5, you have a hard time being up at the bell, and you want to make money in the afternoons when the futures market is still open, but there's just not a lot of action. This is scalping, gambling. But I still love doing it, and it's still kind of fun. But I'll show you an example. Okay, so for scalping, I'm typically only going in with 2 contracts. I keep my stop loss very tight, and I'm essentially just picking up on little tiny moves, up and down. And it's essentially whenever there's like a big, whenever we're in the chop. Okay, and again, this is not a great way to make money. This is a great way to lose money, but I still find myself doing it, and I'm becoming fairly profitable. And it gives me, when I do these trades, I'm usually I'm on a practice account, or I'm on one of my dummy accounts, and I'm just trying to get some extra funds for. Okay, but you would basically enter in here. You see this move to the upside. You're like, okay, awesome. I think we we've hit the ceiling now. Okay, so we had this big move up, and now we've hit the top. We've got a red candlestick. Okay, so what I'm looking for is this bottom here. Okay, so I have this great floor. So what I would do is we went up, we came down, we stopped, we went up, we came down again. So I would be entering 2 points, up here as soon as we kind of hit this new high and we reversed, I would short it, boom, I would get out down here. Okay, and then I would buy back in at the bottom, boom, and I would probably get out up here. And you're just doing real quick pops. Okay, you're only looking for like 2 points of profit, and you kind of let it ride, and you're moving your stop loss, right? You enter and you move your stop loss right behind it as it goes down, and then you get out, and then you reverse it once you finally hit the bottom. Okay, and then you're just gonna keep chopping for a little bit. So you see these really big wicks. This is pretty much what happens when we're scalping, right? We went all the way up. I sell right here, buy right here, sell up here, buy right here, and I keep just digging up and down, up and down, up and down, because it's just so tight, and you just really got to be really focused, and you got to be really in there, and you just got to take small profits, right? And the worst thing that happens when you're doing this is now whenever it really starts to run again, you're like, oh shit, it's actually going somewhere, and you're still just in that short profit mindset. But you're also trying to wait for one of these to really move in the direction. Like, let's say you were basically, you shorted it here, you bought in it here, you shorted it here, you bought in here, right? You short it here, you buy in here, and then this one keeps going. You try and just leave it alone, and let's see what happens. Keeps going, keeps going, keeps going. You probably would have got out somewhere around here, right? Because it just keeps chopping up above. But you would have made a nice little move from down here when it was at the floor, and it rose all the way up here. Okay, so that's what scalping is. Again, great way to lose money, but also, if you get really good at this and you understand, okay, we're in kind of a chop period, I can still make money when it's sideways. That's what I'm trying to get at, right? While it's sideways, while I'm waiting for that next big move. The problem with this is your mindset will now be on those little tiny gains. So then when you do finally get a runner, you'll probably be scared and you won't let it run, right? So that's the risk that you have to do. And then with these little piddly bullshit moves and no volume, you don't want to trade. Okay, the reason that over here it was okay to scalp is there's still volume. Okay, as soon as the volume, goes down below 1,000, just fucking get out. Don't ever trade if the volume is less than 1,000. Okay, but yeah, that's what you're looking for in a scalp opportunity. A volume and it's stuck in a channel, right? Typically at the Asian Open, it's a good little time to make a little bit of money. Now I want to show you the best method that I have found to be successful at trading the NQ. Okay, I still am a breakout trader. Sometimes I do scalping, right? It just depends on the market. But this is the safest, most consistent way that you're going to be able to hit that $1,500 a day and hit that $30,000 a month. A 1 to 3 risk to reward ratio. So that means that if you win, right? If you lose 3, but you win 1, you're still going to be profitable. Okay, so you're usually what I'm doing is I'm trading 5 contracts with a stop loss of 10, right, and a take profit at 30, which means that I'm usually risking about $100 to make $600, which is very, very good, right? Or it's like 200. Sorry, I'm risking $200 to make $600. And I typically do this in the mornings because I want to maximize my profits. But if I don't see a breakout, this is kind of what I'm looking for, though. Okay, so I enter with 5 contracts. I always trade it with 5. You can do it with 3 if you're more risk averse. But I find that if I have the metrics in my favor and I have that stop loss at 10 and I take profit at 30, I'm pretty safe. Okay, but here's the caveat. The number one thing, is timing. Okay, we're always looking for those breakouts or those big moves because the NQ likes to dance. It really likes to dance, and that 10 nothing stop loss is crap. Okay, it's gonna hit it quite a bit, and then you're just gonna be like, ah, shit, I just lost $200. But it is what it is. Let it be. But what's cool about this is remember my rule of 3s. Okay, so you get 3 trades. Meaning if you lose 3 trades, you're done for the day. But if you lose 3 trades with this method, you're only down $600. But if you win 3 trades, you're up, $1,500 plus. Okay, and you're gonna have your take profit at plus 30. Okay, and sometimes I will never move my stop loss, but sometimes I will move my take profit. Actually, I'll move my stop loss up. I mean, I'll never move my stop loss further away from the trade. Okay, and you can short or you can go long, whatever you want, but this is the 1 to 3. This is the safest way. And again, timing is everything. Okay, so you want to enter this trade and you want it to play out. All right, you can take profits early if you want, but I always kind of recommend just let the trade run its course. If you lose, you lose. If you win, you win. But you know that if you win 3 trades, to every if you lose 3 trades, if you lose 2 trades, you can enter in 1 more time and make all your money back. Okay, but if you lose 3, you're done for the day. You move on. You come back the next day. Okay, again, I'll just show you one more time what this kind of looks like. Okay, so it's red because this is in the Asia market, but we got some pretty good action, so I'll just kind of show you what it looks like. So the first one that we could have done, one is this downside breakout. So we kind of have this one, we have this one top right here, and we're looking for this breakout. So we could have entered in right here, and it kind of bounced around, and then it just kept tanking down. We would have entered in here with a 10 stop loss. Okay, so this would have been a good one. So we could have entered in right here, right when it's finally, or right here when it finally broke, 50, all the way down to here to 90, and it would have taken us out right there. Boom, $600 profit with 5 contracts. And then we could have waited for another one over here. Here's another breakout. I mean, this one's a little risky, a little risque. But we had a solid breakout to the top. Boom, would have got in right here. At probably would have gotten in. Well, this looks like a solid green. And then whenever you see this candlestick with no wick at the bottom, that means it's a solid move to the upside, right? So we could have got in right here at 502, right? 502 all the way up 7 up here, or where the hell 7 is, right here. Boom, taken out right at the top of that. And then basically you're just looking for these little breakouts, right? So here's another breakout. Boom, you could have got in, probably could have took some profit. But the main thing is you just want to win. Right here is a great place for scalping, right? Look at this scalp action we could have got in. We sell down here, buy right here, sell, buy, sell, buy, sell, buy, chop your fucking head off, make your little $600, and then wait for this big breakout right here. Boom, to this downside. Could have got in here for the take profit move for sure. It just depends on where you put your floor. Probably would have been right here. get it all the way down to here. Maybe probably wouldn't have made it, would have bounced back, probably would have knocked us out, but then we could have got in again right here and got that full move. Okay. Okay, so I hope that was helpful. I'll try and record a couple more videos before I publish this. Well, that was a great move. So this is a great example of where we would have made a ton of money with the take profit. And the take profit, it just is real quick, right? So we got this right here. We kind of might have got into early right here and got taken out. But this, I don't think this would have hit our stop loss. But this one where it pops above, I mean, really, we probably would have gotten in more like right here when it pops above. When it got in, stop loss at 2, all the way up here, boom, take profit, make lots of money. Probably would have got taken out like right here at this 10. But that is the strategies, guys. And that is the 5 rules to making money trading the NASDAQ futures. All right, let me know if you have any questions, and I'll add some more live examples of this later on. Please like, subscribe, leave me some comments, and if you want to work with me and trade in the mornings, you can join our day trading mentorship. Link is down below. I'll talk to you soon.